Hello traders, welcome to the latest weekly update of As Good As Gold. I'm Dilin, research strategist at Pepperstone. Gold has faced significant selling pressure in the past week, driven by strong downward momentum. In this video, I will provide an overview of the precious metals performance, analyze gold technicals against US dollars, and discuss the factors contributing to the recent headwinds, also highlight critical data to watch for the rest of the week. So if we look at the precious metals, they have experienced substantial declines across the board. Silver has dropped by 6% against US dollar in the past 5 days, breaking through the well-tested support at 22.23 last Friday. While gold hasn't suffered as much as silver, it is still down by 2.8%. Moving to the daily chart of gold against US dollar, we can see that after breaching the psychological level of 1900 and exiting a 4-month trading range, sellers continue to drive the price lower, breaking below the local low in mid-August at 1884. Now the pair is trading around 1824, and if bears further intensify the pullback, the next potential support could be 1810, and I want to bring your attention that 1810 is such an important level to monitor, not only as the low last seen in February and March this year, but also the level that could break the downward channel formed in July. Serving at the channel low, a massive buying can happen when the level is about to be touched, thus the market reaction will be crucial at 1810. And also, gold is struggling against some weaker currencies like Euro and British Pound. The former is approaching support level at 1734, while the nearest support of the latter is at 1479, where all the gains over the past 6 weeks will be compromised. Several factors are contributing to the headwinds facing gold. Firstly, there are expectations that high interest rates will persist for an extended period. The recent Fed meeting cut 2024 interest rate projections by 50 basis points, reinforcing the higher for longer policy stance, and additionally, the SOFR implied only a 78 basis point rate cut, equivalent to roughly 3 cuts next year. Fewer rate cuts support the US dollar and weigh on the price of gold. Secondly, the hawkish policy elevated the whole yield curve of the US Treasuries, particularly at the long end. The 2-year yield stands at 5.15% and the 10-year yield at 4.8%, reaching levels not seen since 2006 and 2007, respectively. In this case, the opportunity cost of holding zero-interest gold is exceptionally high. People would rather reduce their gold exposure and earn a risk-free return if the investment case is not there yet. Last but not least, the strong performance of the US dollar has made it an attractive defensive asset in the portfolios. The dollar index has enjoyed an 11-week winning streak, supported by positive manufacturing data and a resilient labor market. Simultaneously, equities have seen declines in recent weeks, with the S&P 500 falling by 4.9% last month. Given the US dollar's promising trend and its negative correlation with equities, investors have been using the US dollar to hedge against risk instead of gold, further pressuring gold prices. Combined with the decrease in fund holdings, it's unlikely that this downtrend in gold will halt in the near future unless there's a significant shift in the information flow. However, in the mid to long term, much depends on when the Fed changes its QT strategy and lowers interest rates. When that day comes, I think gold will really rally hard as the appeal of US dollar diminishes. In a word, gold has been facing headwinds over the past week due to the high for longer policy stance, a strong US dollar, and fewer expected rate cuts. For the remainder of this week, investors should keep an eye on the US non-farm payrolls data. Any significant deviation from market consensus could impact inflation expectations and increase the likelihood of a Fed rate hike in November. Following the logic discussed earlier, a higher interest rate can strengthen the US dollar and conversely weigh on the price of gold. So that's all for this week. Stay tuned with Pepperstone.